Markets are super flat this morning with everybody tense and wondering what might happen today with Zelensky and I don't know, 25 or 50 other European leaders in DC. We want to know what's going to happen with the Ukraine war. That is certainly on everybody's mind. Then we've got to wait all the way until Friday to find out what is going to happen at Jackson Hole with regard to future trends and interest rates. The Fed will be meeting, of course, this Friday. That's always a huge, big meeting. And, we don't know what's going to happen. And everybody thinks the signal that we're going to need to see a signal there about what's going to happen in September. With no other really significant economic or political news, the markets are going, we don't know which way to go. As mentioned, how many times now over the last 3 weeks, I think the markets are stretched. That could be a problem too. How do we go up from here with the PE ratios at such high numbers? Well, Tesla nicely is up a tad this morning, couple dollars. That's better than being flat or down. So we'll take a couple of dollars. Sawyer Merritt has this. Now, this is something I've talked about in the book, the Elon Musk method. I've talked about it in the Elon Musk mission. It is one of the biggest moats that Tesla has and something that helps Tesla in ways that it's almost hard to imagine. But here you go. Tesla has introduced yet another new feedback feature. You can now report FSD issues such as mapping issues, services-related feedback, robotaxi, supercharging, anything that you want to, any kind of an issue you're having with regard to Tesla, you can now have a new place to report it. Tesla will route the feedback to their respective teams and track for closure. You can also upload documents. This new feature for the first time creates a unified feedback system and should improve the overall ownership customer experience. The feature is currently only available on the web in your Tesla account, but will launch soon directly in Tesla's mobile app so you can provide feedback anytime. Again, I've said this, if you watch the channel often, you've heard me say it many times before. Maybe if you owned your own business or if you've been in management in a business, you know this to be true. Can you imagine if your products or services were getting literally thousands or even tens of thousands of pieces of feedback information from your consumers on a daily basis? As a retailer today, I get a little, I sell on Amazon. I get a tiny bit of feedback as somebody who does this channel and puts out posts on X. I get a little bit of feedback from you guys, letting me know how I'm doing, and believe me, it helps. I mean, the improvements on the channel since I began, I know what they are, and you probably know what some of them are too if you've been there from the beginning. But compare that to the kind of thing that a manufacturer, as a manufacturer, I used to sell to wholesalers. The wholesalers sold to the retailers sold to the consumer. I wasn't getting any feedback from the consumer. I wasn't really getting much feedback from the dealers unless I went out and tried to get it. The salespeople for the distributors were selling to the dealers. I would see some of them at trade shows and I might get a little bit of feedback. But Tesla, as a manufacturer, is getting feedback from the equipment on the car. If you have some kind of a problem with FSD, you just you bump the thing and you get to tell them what's going on. Your car itself is providing feedback. And then Elon has, what is it now, 240 people following him on X. And it's easy for Tesla to pull in all the stuff that we say about it on X every single day. This is incredible amounts of customer feedback in order to make decisions about the future. Anyway, this is another method they're going to add to it. They love getting this feedback so much, they're adding even more. Okay, we have this. Whoops. Here we go. Barron's this morning is saying this. Tesla stock was down in early trading. Whoops. No, it wasn't. It's up on early trading. After rising for 5 consecutive days, shares are now at risk of a 4-day losing streak. Well, they're still at a risk of a 4-day losing streak, or they're at risk of maybe turning that around and being up today. The electric vehicle maker's stock was trading around 328, now about 330. Tesla stock is roughly $8 higher than, no, now it would be $10 higher, right? Than the 322. Let's see, where are we really? Let's get this Barron's article right, because I do the same thing every day. I put out a number. I say where we're trading when the article goes out, and it's not going to be trading there in 2 hours. You see this every day. So we got it at 333 right now. They're saying 328. So now it's up, quite a bit more than they said, like $11 compared to 322. A couple of days before Tesla launched its self-driving service in Texas. It was a modest launch with a handful of Tesla Model Y vehicles. We know this. Still, it was a big deal for investors who expect robotaxis to unlock a new era of earnings growth for the automaker. Shares closed at 348 on June 23rd, as we all remember. They just haven't been able to maintain the momentum since. As always, the stock market is a forward-looking, instrument, and most of the robotaxi-related gains appear to have happened before the actual launch. And shares have gained 35% between October, when management demonstrated robotaxi technology, and when Tesla started on June 22nd. Of course, a lot happened in between, Barron's. You think we should have mentioned something about a presidential election impacting those share prices? Anyway, new investors appear to be waiting for catalysts such as this is the whole reason I read the article. The whole reason I brought you this article. Now, investors appear to be waiting for catalysts such as additional cities and the removal of the safety monitor. Yeah, you think? Anyway, they may be waiting for a couple of more things like the addition of way more cars in the territory as well, and providing services to everybody rather than to just a few limited individuals. The Motley Fool says this morning. According to Markets and Markets, the global robotaxi market is expected to grow from approximately 617 units in 2021 to roughly 1.45 million units by 2030. I would hope it would be way more than 1.4 million units, but I'm reporting this to show you what other people are thinking. Reflecting a compound annual growth rate of 130% in terms of revenue, Fortune Business Insights project that the markets will grow from about 1.7 billion in 2022. Robotaxis at 1.7 billion in 2022? I don't think so. Maybe overall ride-hail? No, ride-hail would be much more than that. I don't know where they get that number. In 2022 to about 108 billion by 2029. Okay, that would represent an 80.8 CAGR. Tezorati is reporting this morning that the Model Y Ls are going to be coming soon. AJ is agreeing with them. They're already seen shipping to showrooms in China. AJ thinks this has to do with some kind of timing with regard to the third quarter. Anyway, I think we're going to be seeing Model Ls up there ready for people to buy very, very shortly in China, if you happen to be listening from there. The vehicle also comes with continuous damping control suspension, a larger central display, an upgraded audio system with about 18 speakers, which is described as a significant improvement in sound quality. How can you get it even better? Amenities have been reported, expanded. Passengers. Amenities in all 3 rows. Heating and ventilation will reportedly be available in the first and second rows, while the third row will still have heating only. Interesting. No cooling in the back row. The third row space was described as adequate, with the passenger standing 1.78 meters tall, reportedly being able to sit with a fist's worth of headroom. Tesla's minimalist interior design reportedly remains, but the second row now includes armrests. Both the second and third rows are reportedly flat. They also fold flat. Both the second and third row fold flat to form a large bed, not the kind you sleep in, a bed, like for putting things in, and not as flat as the standard Model Y. And then you have a voice wake-up feature. Hi, Tesla is also included in China models. Okay. Well, I wonder what that is. Why didn't give more explanation of what that is? A voice wake-up feature, Hi, Tesla, is also included. All right, I don't know. Sawyer Merritt says this. How about this news? Again, we all know this, but now, it's being reported. It's nice it's being reported. Model 3 and Model Y are the least likely vehicles to be stolen. According to new data from IIHS, EVs in general are 85% less likely to be stolen than the industry average. But of course, Teslas are really difficult on so many levels. And then while you're trying to steal the car, you're being recorded. Not good. Not a good thing for thieves to be recorded. This is Randy Kirk. Please hit the like and subscribe and notify and all that jazz. And Donald Trump's new immigration policies, including deporting, the White House claims about 750 immigrants a day on average, are helping to drive up prices. This is according to Moody's chief economist, Mark Zandi. Wow, people are finally starting to take into consideration what's going on with the immigration outflow. Listen, I'm a big fan. I believe the border should be closed. I believe that we should send back at least a few million of the folks that have come over recently. You've heard me before, and many of you vehemently disagree. There's no way we're sending home 20 million people. That's just not going to happen. So at some point, Trump is going to have to make a decision about what he's going to do with everybody else, because there's just not going to be sending home 20 million people. He says, but it's great that we're finally looking at that impact on the economy. It has impacts in many, many different ways. And one of those could be inflation. I'm going to argue the opposite, but let's go. He says if Trump continues deporting immigrants at the current rate, inflation will go up from 2.5 to somewhere close to 4% by the time it peaks early next year. Sandy says its stark prediction is based on recent inflation data. Foreign board labor force is declining and the overall labor force has gone flat since the beginning of the year. He says that's causing tightening of the labor market, according to adding to costs and inflation. Well, okay, we're not seeing that. I agree the labor information may be lousy, but we're not seeing what he's talking about. So if he's talking about taking into consideration current labor information, we're not getting that. Okay, we're getting we're getting the overall labor market still at 4.2%. We're not seeing large increases in wages. We're seeing about the same increases in wages as we have been seeing, and all of the data are saying exactly the same thing. He says the Labor Department reported Thursday, that was the Producer Price Index, a measure of wholesale inflation before it hits consumers, rose 0.9% from June to July. That's the biggest jump since 2021 compared with a year earlier, where wholesale prices were up 3.3. Okay, we've explained this and explained this and explained this. Why are people 5 days later, a week later, who claim to be economists, not looking into the details of the data? A jump in the cost of services about 1.1 accounted for more than 3/4 of the increase in PPI. This follows data earlier in the week showing, but the labor pool of immigrants had nothing to do with that. It was almost entirely to do with the margins that wholesalers are currently charging, going up dramatically. And I think it was wrong. I think it'll come right back out next month. The White House pushed back on the idea that Trump's deportations are fueling inflation, framing the crackdown as part of an effort to tap untapped potential in a domestic workforce. Spokesman Abigail Jackson said more than 1 in 10 Americans, 10% of Americans, are neither working nor in school, and that should, of that age group, and told Fortune that the administration is focused on protecting the American workforce and ensuring job gains go to native-born workers, and that's what we're seeing. So far, the last 2 years, as I was reporting here, every time the numbers came out, all the numbers were foreign-born. Then all the increases were foreign-born. Now, all the decreases are immigrants, and all the increases are coming in as American citizens. She says, since Trump returned to office, she said 100% of job gains have gone to native-born American workers. Right. However, the Heritage Foundation economist Steve Moore, who I respect, recently paraded alternative jobs data next to Trump, told Fortune he's nonetheless worried about a labor shortage. That's true. 100% we have to be worried about a labor shortage. I think it'll be picked up a huge amount by automation, but not forever. I think the deportation of working illegal immigrants could have a slight impact on wages and thus prices, he said. Sandy's remarks place him firmly on one side of the growing split among economists, since the shock July jobs report showed very low job creation and steep downward revisions to prior months. So we got, again, so many moving parts. I've been talking about this for a while now. It's going to be very hard to know how this will all play out, because we got so many different things. We got the tariffs, we got the onshoring, we've got all the new investment, we've got the big, beautiful bill. All these things are impacting the job situation in all different ways. Some of them would be creating a lot of potential new jobs because it's stimulative, and new manufacturing jobs because that's what they're trying to do, trying to onshore those. Other things would be maybe detracting, as we have these tariffs that may be reducing the amount of the labor that's used for handling imported goods. Anyway, his camp, which also includes Morgan Stanley, Barclays, and Bank of America, argues that hiring has slowed because the labor supply has been artificially constrained by Trump's deportation border closures and also self-deportations. It's the southern border being shut down. It's deportations, self-deportations. He said immigrants are scared. They're leaving the country. They're not coming in, and they're not going to work. 100% true and a good thing, but it's going to impact labor. He estimates that, now listen to this now, when they want this guy's obviously pro illegal immigration. When he wants the numbers his way, he's going to switch now, and I'm going to want to use these numbers in future arguments. He estimates the annual number of immigrants, legal and undocumented alike, has fallen from 4 million a year at the 2023 peak to just 300,000 to 350 now, and those are all legal. That's a massive change, Zandy said, and what he believes is significantly lifting the cost in sectors that rely heavily on immigration labor: construction, agriculture, manufacturing, transportation, distribution, hospitality, elder care, child care, and other personal services. Yes, could happen. Fresh and dry vegetable prices, for instance, surged almost 40% in the latest PPI, while tariffs and weather also factored in. Sandy said immigration restrictions are a major culprit. Well, then give us the details. I think you are incorrect. I think this was as I've explained, and as he doesn't bother to go into the detail, he says weather, he says maybe it's also the tariffs. What he doesn't mention is that the prices had gone dramatically down since the first of the year. And this was actually a rebound to something closer to normal. They actually, I think, went down 25% in 1 month. You can see it in meat prices. Meat prices, 100% weather. This has been a problem going back to a year ago. And they culled the herds because they didn't have enough grazing land. He says you can see it in agriculture, food processing, haircuts, and dry cleaning. Dry cleaning. The fingerprints on the restrictive immigration policy are all over the CPI and PPI numbers we got this week. I just completely disagree, as I've just explained. If Sandy's diagnosis is right, he says the Federal Reserve can hold state rates steady without worrying about a cascade of layoffs, because the weakness in hiring stems from fewer available workers rather than collapsing demand. No, just 100% not true. Nothing about what he's saying is true, but it is an issue. It's just not an issue the way that he's providing it. Now, if we continue to have very low immigration and we continue to have out-migration, then at some point he's going to be right in some way, unless we get enough automation in to take care of the problem. The other camp, however, sees a different story. That would be me. A genuine slowdown. Oh, no. Well, yes, that could happen too. So we have a potential slowdown in labor because businesses are pulled back among economic uncertainty. They point to sectors like manufacturing, transportation, and warehousing, where payrolls have been shrinking for months, and to surveys showing declining job openings. In that scenario, Trump's policies may be a factor at the margins, Andy said, but the main driver is waning business confidence and softer consumer demand. And they forget to add in AI, which we know is definitely AI and robotics, which we know is cutting demand for workers across all categories. Well, Fed policy is caught in the middle. The distinction matters from monetary policy. A true drop in labor demand would usually ease wage pressures and inflation, giving the Fed room to cut rates. But remember, the Fed isn't interested in they don't want the wages to go down. What the Fed wants is the wages to be going up at about 2.5% while inflation's at 2%. That's the Goldilocks scenario. But they don't want wages to go down. That's the opposite of what they want, and it's the opposite of what Trump wants. He wants wages to go up faster than inflation, so we get real income increases. Sandy warned immigration-driven inflation is a supply side shock. Something interest rate changes can't easily fix. Haven't seen it yet. Don't think we're going to see it yet. But again, it could happen. Demand side inflation has a different implication for monetary policy than supply side inflation, he said. That's true. Rate cuts won't bring more immigrants into the country. That's true. He also argues that inflationary effects of immigration restrictions will be more persistent than those of tariffs. Tariffs are more likely to be one-off. Well, there you go. At least he agrees on that. Restrictive immigration adds to shortages, higher labor costs and wages, and they become self-reinforcing. Again, we're seeing none, zero product shortages, none. If we were, we would be seeing huge headlines. We're not, and the increases in those prices he mentioned were not due to immigration problems. They were due to very much 100% to weather and to variations in wholesale pricing. Economists at Bank of America echo the stagflation risk. Yes, they have been, but it's just not here. There's no stagflation. There's no stagflation. We are under 3% on inflation. We're at 4.2 on jobs. I don't know there's just nothing at all, but they love to use it. They expect and they say that's why they expect the Fed to avoid cutting rates because of stagflation, but there is no stagflation. Oh, I'm starting to rant, aren't I? Okay. But bond traders are starting to price in a slightly more hawkish Fed, pushing short-term treasury yields a touch higher, although they came down and maybe they're coming down today. They were a minute ago. Zandy believes easing immigration restrictions could quickly help bring inflation down. I do believe that Trump will begin to bring in more labor at all levels. He's already talked about helping out the farmers and the construction industries and what do you call it, hotels, etc. He's already talked about doing that, and I think that he's aware of it. If we had a national immigration policy where we allowed immigrants of all skills into the country, that would be a game changer. By the way, I agree with him. And it's got to be vetted, and it's got to be measured. Whether the White House acknowledges the link between deportation and inflation, Zandy wouldn't speculate. Tariff inflation is not at the top of the list of the reasons they're pursuing restrictive immigration policies. He said there's a lot of other motivations. That's true. No truer words have ever been spoken. All right. CNBC has this. OpenAI CEO Sam Altman thinks the artificial intelligence market is in a bubble. This is according to a report from Verge. When bubbles happen, quote, when bubbles happen, smart people get overexcited about a kernel of truth, Altman told a small group of reporters last week. Are we in a phase where investors as a whole are overexcited by AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes, he was quoted as saying. By the way, I don't think we're in a bubble yet. Is it possible to get into a bubble? Yes. Where is the bubble most likely to occur? People investing in companies that aren't really real. That's where the bubble hit. Last time, they were paying way too much money for companies that didn't have any product, didn't have any sales, didn't have any profits, didn't have any hope of profits, were just concepts and had .com on the end of their name. Now it would be having AI on their name. That's what to be worried about if you start to see a lot of that. Altman appears to be comparing that dynamic to the infamous .com bubble, a stock market crash centered on internet-based companies that led to massive investor enthusiasm during the late 90s. But then between March 2000 and October 2002, the NASDAQ lost nearly 80% of its value after many of these companies failed to generate revenue or profits. So that's what we got to watch for. I'm not seeing it yet. Let me know in the comments below. Are you seeing it? Are you seeing significant companies? There's no IPOs at all. We had IPOs like crazy in the 90s. There's like been 12. And the IPOs that are coming out have profits and they're doing great. His comments add to a growing concern among experts and analysts that investments in AI is moving too fast. Alibaba co-founder Joe Tsai, Bridgewater Associates Ray Dalio, and Ray Dalio, who's always, he's predicted 27 of the last two crises. And Apollo Global Management Chief Economist Torsten Slok have all raised similar warnings. Last month, Slok slated a report that he believed an AI bubble of today was in fact bigger than the internet bubble, and the top 10 companies in the S&P 500 more overvalued than they were in the 1990s. He says this with a straight face when these companies have massive earnings, massive margins, incredible balance sheets, and their PEs are like 30. In a Monday email to CNBC, Ray Wang, research director for semiconductors, supply chain, and emerging technology, man, that's a long title, at Futurum Group, said that he thought Altman's comments came some validity, but he says the risks are company dependent. From the perspective of broader investment in AI and semiconductors, I don't see it as a bubble. The fundamentals across the supply chain remain strong, and the long-term trajectory of AI trends support continued investment, he said. However, he added that there is an increasing amount of speculative capital chasing companies with weaker fundamentals and only perceived potential, which could create pockets of overvaluation. But it's happening where? It's happening in the private markets. It's not happening in the public markets. Many fears of an AI bubble had hit a fever pitch at the start of this year when Chinese startup DeepSeek released a competitive reasoning model. The company claimed one version of its advanced large language models had been trained for under 6 million, and that created a bunch of concern that all of the major, hitters were overvalued. But earlier this month, Altman told CNBC that OpenAI's annual recurring revenue is on track to reach 20 billion this year. But despite that, it remains unprofitable. The release of OpenAI's latest GPT-5 AI model earlier this month has been rocky, with some critics complaining it was less intuitive feel, and it wasn't that great. It wasn't that much of an improvement. This resulted in the company's restore it, but it's a private company. It's privately held. It's not publicly held. Following the release of the model, Altman also signaled more caution about some of the AI industry's more bullish predictions. Speaking to CNBC, he said that he thought the term artificial general intelligence, or AGI, is losing relevance when asked whether the GPT-5 model moves the world any closer to AGI. Well, AGI, ASI, the singularity, etc. We'll be covering all of that in our upcoming book, so get ready to place your order in mid-September. Breaking! Builder confidence received a slight boost in July with the passage of the One Big Beautiful Bill, but remained near its lowest level in 2.5 years. The National Association of Home Builders Housing Market Index inched up to 33 this month. That is 1 point from June, from 32 to 33. This marks the fourth lowest level in the index since 2012. So yeah, it's inched up and it's not very high. So we've got, and I don't need to explain that. You don't need any analysis from me on that at all. All right, Trueflation, 1.97 in the overnights, 1.91 year over year, and 2.61 for the PCE version. Trump sitting at 47%. GDP is at 2.5, and we will get new numbers tomorrow, but probably won't be reported by me until Wednesday. And the VIX was at 15.5 last time I checked, but I always put that down to remind me to take a look. VIX is at 15.38, continuing down this morning. So the markets overall are slightly more risk on, but man, they're flat this morning. Tesla up 0.57% this morning. It's been up a little higher, but it's kind of flattish where it is at 332.30. You got the Dow at 0.0000. You got the NASDAQ at down 0.28 and the S&P at down 0.11. And the Magnificent Seven, other than Tesla, NVIDIA is the only one that's up barely, and all the rest are down barely. You've got the Cathie Woods that are mixed. And let's go ahead and go on to the bonds. You've got the bonds up 0.7 of a basis point at 4.335. This is not right. This is not the right direction. All right. Oil prices down 4 cents. So they're flat. You got natural gas down 0.96. For them, that's flat, but it's at $2.88. You've got the gold prices down again, flat, down 70 cents at 33.81. You got silver down 0.3. I'm sorry, up 0.3 at $38. Everything is pretty flat today. Copper up, down 0.6, $4.47. You've got the dollar firming a bit, but kind of mixed. You've got Bitcoin down 2,543. That's 2.17%, back down to 115,128. So there you go. You've got the VIX showing risk on. You've got the markets flat. You got the crypto showing, the Bitcoin showing risk off, although it could be profit taking. You've got Tesla slightly up and the market's flat, flat, flat. So it's kind of a mixed up morning. Depending on what business you're in, but an interesting morning nevertheless. All right, so this is Monday. So later on today, you got Larry Goldberg around 4 o'clock. You've got Brian White at 7:30, 7:45 California time. And last night, I did a video that received almost no views. So there's one you can go back and take a look at. And in that video, I gave you four different places where the market is completely wrong on Tesla. I mean, not wrong. They're not even paying attention. So no, this is not Robotaxi. This is not Optimus. Well, kind of, sort of, maybe. But these are things, and again, if you watch the channel all the time, you'll go, oh, Randy, you've said this before. Yes, I have. But when was the last time? And there's always new people coming on. And besides, maybe you need a reminder, but these four things are worth $5 a share. $5 a share. Yeah, go ahead, look it up. Last night, I put the card right here. All right, that's all I got for you right now. As always, it's been great talking to you.